Hello friends, I hope you're doing well in the markets and you're enjoying the way the markets ran up on Thursday, just as I recorded a video on Tuesday about why you should not really be bothered about the fall on Tuesday and how on Wednesday the markets could start picking up the threads and start going higher. That hypothesis was validated by the prices, and nothing can make a market watcher happier than the fact that his analysis or his reading of the tea leaves of the market is spot on. So, in this video, I want to talk to you about a segment of the market that appears to be a little under pressure. Some minor distress, although distress is a strong word, but like I added the word minor to it, still early days yet, but if you're a trader in the markets, you need to exercise abundant caution in this segment. Friends, some days ago, or rather more than a week ago, I recorded a video as to how you should be careful about banking stocks for the simple reason that the RBI is slowly but surely and undeniably that too changing the rules of the game. Now, the RBI has said it is open to the idea of rising interest rates, which is why they let the new 10-year benchmark bond yields higher from 5.85% to 6.10%. To the layman, it may not really be earth-shattering, but believe me, to financial markets, this is like a ground-shaking event. Now, the government is basically the largest borrower, and in these times of financial stimulus worldwide, if the government is willing to borrow money at higher interest rates, it means that the cost of raising money of each and every entity is going to go up. So typically speaking, I will not be surprised if a couple of months down the line, if banks start to offer you higher interest rates on your fixed deposit. As a matter of fact, the State Bank of India was the first bank within 48 hours to announce a new kind of a savings account for customers, zero frills account. Of course, you will be allowed only 25 check leaves in that account per year, and anything extra beyond what is offered as default in that account, if you need anything extra, you will have to pay extra charges on that account. But SBI is willing to pay a higher interest rate on this deposit amount. Now that basically is likely to set the ball rolling for other banks, and it will have a trickle-down effect. Now, a 360-degree worldview means that as soon as you read something in a newspaper, like say a headline like this, the first thing you should train your mind is to say, all right, this has happened. How do I make money out of it? How do I convert it to a trading profit? Because I need to put food on the table, I need to pay my bills, and I want money. Now, the first thing that came to my mind is I set up on my Market Watch. Market Watch is the space on your trading terminal where stocks are listed which you are interested in watching. I immediately added NBFC stocks on my Market Watch. And guess what? I've been seeing NBFC stocks coming under pressure, and slowly but surely they have been seeking lower levels. Now, being a veteran trader of more than 35 years of experience, I want the cause and effect theory. I want to know the reason why I'm going to do something. And as somebody recording this video, I want to share with my friends and viewers who are watching my videos the rationale behind the recommendation, the rationale behind the method behind the madness that you call the market. Now, you see, if the banks are going to feel the pinch when it comes to rising interest rates, NBFCs are nothing but non-banking financial corporations that raise money in either one of these two ways. Number one, they take deposits from the public. Now, these are corporate deposits. Obviously, the interest rate is much higher than the bank fixed deposit because this is an unsecured deposit to a private party, where no sovereign guarantee or deposit credit guarantee insurance act of 5 lakh rupees per account comes in. So the depositor demands and gets a higher interest rate. Or the other way the NBFC raises money is to borrow money from the bank and then lend it to the person who is borrowing from the NBFC. So for example, if you're going out there and buying a LED, LCD TV, a refrigerator, a washing machine, or a home theater system, or even a car, chances are that you are getting funded by an NBFC who has borrowed money either from the bank or has raised it from fixed deposits. Now, if this cost of funds going to go up, then what really happens to the NBFC's profitability? If I, as an auto loan consumer of an NBFC, have signed a fixed interest rate loan on a car that I have purchased, my EMIs are not going to go up because it's a fixed interest loan. But the NBFC is going to borrow money from the bank at progressively higher rates of interest, and it is continuing to take the same EMI from me, which means its margins are going to fall. I admit this will happen in the future, but do remember that the stock markets are a forward discounting mechanism, which means they basically build events way beyond the present and anticipate the future before pricing a stock of any company that is listed on the exchanges. And from the screen that I am seeing on my trading terminal, I do see NBFC stocks, many of them, not all of them, many of them appearing to be under pressure. So, if at all you're a trader, you know what to do. If at all you're an investor, nothing to worry about. If you're a long-term investor, there's no need to go out there and clean up your portfolio and broom every NBFC stock down. I'm not saying that. It's just that the rate of appreciation in the price might be a tad slower. For an intraday player, you might even consider some amount of shorting on select NBFCs. This is not a basket case of taking a blanket short on each and every NBFC. You'll have to be selective. And in my past videos, the basics of short selling, I have given you a proven system of how on the snap quote window you check the LTQ versus the ATP versus the previous close method, and only when this criteria is met will you go short on any counter. You see, the idea of a trader is that a trader is a brain warrior. We fight, win and lose with our ideas. As long as I have a head full of ideas, I know I'll be able to put food on the table for my family. I might just take risks with losing money once in a while in trading, which is fine. I panic only when I don't have ideas and I don't know what to do. On that day, I can't trade. So this is another fresh idea from me to you. I hope it stands you in good stead. And by the time you see this video, do remember, I'm recording this video on a Thursday. It will be uploaded on a Friday. And last Friday, I recorded a video which is my favorite trading hack as to why I like to watch the last 1 hour of trading on Fridays. Do remember, today is a Friday and the last 1 hour of trade will be very critical for you because it will determine the tone, the tenor, the mood and the extent of rise or fall on Monday. I hope this is a very, very profitable trading session for you. Thank you for your patience. Thank you for watching my videos. This is Vijay Bhambwani signing off for now, not before reminding you to subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. In the comment section, good, bad or ugly, do give me every thought that you have. Also, let me reach out to fellow like-minded investors and traders by referring my video to your family and friends. Thank you for your patience. Till we meet again in my next video, Vijay Bhambwani signing off for now. Take care. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.